Nigeria's first bank grew its third quarter pre-tax profit to 49.01 billion naira in the year through to September from 40.70 billion a year ago. The bank's gross earnings rose to 211 billion naira from 177 billion naira previously. Bisi Onasanya, Group MD at First Bank of Nigeria, joins me now from Abuja to discuss the bank's third quarter results in what is becoming a fast and hotly contested industry right now. Bisi, thanks so much for joining us this afternoon. So we've seen the growth trend for First Bank having continued from the second quarter, with gross earnings increasing over 19%, PAT up 31.7% as well. Let's run through growth drivers for the companies right now.
Thank you very much. It's my pleasure to be here today. We did have a very good quarter, and as we pointed out in the second quarter, we are on course to delivering a very superior performance to our shareholders at the end of the year. We are beginning to see the improvements generated from the transformation of the bank and moving from the geographic focus to market segmented focus with deep penetration. And we now have an increased share of the customer's wallet. We now have faster turnaround time for customer transactions. And what we begin to see now is an increasingly profitable bank.
With that being the strategy, I mean, the results pretty much in line with expectations, BC, but there are still a few challenges that you've got to contend with here, where we had net interest income up 33%. The group still grappling with non-performing loans. Just how much of a challenge is this posing for the group right now?
I don't think that's a challenge. Don't forget that we guided on a 5% non-performing loan for the end of the year. Right now, we have about 4.7%, which is still within that target. It also reflects the entire economy in which we operate. We chose to play in all segments of the market, as against some other banks who chose to play at the top end of the market. Now, it's a reflection of the entire portfolio and a reflection of the entire economy on its own. Now, we just came back as part of our efforts to assist the government in looking at how do we deepen that segment of the various segments of the market, de-risk those segments of the market and make them profitable for banks to deal in. Yeah. We will always be responsible as an organization to report what the position is, but we believe that we are very much on course to guided numbers of 5% for the end of the year. Let me seize this opportunity to confirm that the First Bank's balance sheet and performance has shown the resilience of the bank at this particular point in time. In spite of developments in the economy, which is not separated from the global environment, you still see a bank that is delivering 38% increase in net income at this particular point in time. I think we should be commended. This is also coming on the back of the transformation agenda of the bank and the restructuring of the banking industry by Central Bank of Nigeria. I think we are on course to see the last part of the financial year maintaining the trend that we have seen in the first three quarters. Yeah. And I look forward to a very wonderful performance.
Of course, as you mentioned, BC, I mean, that non-performing loan ratio standing at 4.7%, it's pretty close to that 5% target that you do have in mind for the end of the year, considering that your provisioning has, risen to 61 billion naira from 49.9 billion last year. So what risk mitigators are you employing right now to manage that position moving forward so that you are below that 5% target come the end of the year?
We confirm that we'll be below the we'll confirm we'll be within the 5% that we guided during the year. We do have a very robust credit risk management system in place. We do have procedures also to make sure that we work with customers to work out on their balances and avoid situations where we have to classify as lost portfolio at the end of the year. We do have challenges with some of the customers, particularly at the retail end of the market. This is normal. Mm-hmm. And in banking, these things do happen. What is important is that we are very close to these customers and we assist them in working out. Sometimes we need to restructure the facilities, give them additional loans to improve on their performance.
Of course, your loan book grew 11%, this time around. It's within an environment where we're looking at a higher inflation rate environment, and we're seeing aggressive monetary policy or monetary tightening come through as well. How is that impacting the business moving forward? And should we at all be expecting a tightening or reining in of the loans that you're putting out there?
Now, if you reflect what has been happening in the Nigerian economy in recent times, you will realize that central bank has no option other than to tighten money supply in the economy, which to put in the controls that they just put in now. And we are in support of that. We expect that with the increase in rates, naira becomes more attractive for borrowers to come into the market, and it puts less pressure on the exchange rate, which is the objective of central bank. Now, one of the things we've done now to make sure that we expand our income basis to move into the Democratic Republic of Congo, and we have concluded the acquisition of the most profitable bank in that country, delivering returns on average equity of 27%, which is above industry norm, both in Nigeria and even in DRC. We believe that with this acquisition, we would also be able to, to mitigate the impact of concentration in Nigeria on our earnings. And as we move on and transform this organization, that's the BIC, that's the Bank International de Credit in Congo, we expect that it will also improve our own earnings and performances at the end of the year.
Of course, you've mentioned this latest acquisition that you've made as part of enhancing your geographic footprint on the continent. Let's take a look at your strategy when it comes to African growth, BC. I mean, are we looking at acquisitive growth from here on out, or is organic growth part of that equation as well?
Let me be very clear. As far as Nigeria is concerned, our strategy is accelerated organic growth. But moving outside Nigeria, we intend to increase our footprints in certain key segments of the African market. And we have carefully selected the markets which we want to go into, looking at the macro environment and the profitability of the banking industry in that environment, as well as the potentials of each player in that environment. Let me make it clear. We do not intend to impose our banking practice, to impose the management of the bank on the banking acquisitions that we do outside Nigeria. We intend to be what we regard as multi-local bank. That's a local bank in every environment in which we go into. So that way we mitigate the negative issues that we have seen in some other bank that went outside Nigeria. We intend to continue using the locals in that environment, but bringing in our own practices to make sure that we have best-in-line practices in those environments. So we want to be a multi-local bank in each of those environments, and we would also not go greenfield in those environments. We would always go for the most profitable, the very efficient banks with potentials in environments and countries which we have clearly highlighted that we want to go into. Thank you.
Bisi, thanks so much for your time this afternoon. Bisi Onasanya is, of course, Group MD at First Bank of Nigeria.